The GBP-USD currency pair is currently at a major crossroads, and traders everywhere are asking, has the British pound hit an unbreakable ceiling, or are we on the cusp of a surprising breakout? Let's dig in, because this is where opinions really start to diverge, and the stakes couldn't be higher. To begin, it's important to emphasize just how stubborn the 1.36 level has proven to be for the GBP-USD pair. On Tuesday, the pound did attempt an upward climb, but hitting 1.36 sparked a reversal that sent it lower once again. This price point has acted as formidable resistance before, so it's no shock that it's holding firm now, especially considering the recent rapid rally propelled by a disappointing US jobs report. That surge was dramatic and abrupt, but can momentum alone overcome long-established resistance? That's the million-dollar question. But here's where it gets controversial. Despite the pound's recent energy, the United States is still the central force in global finance. When uncertainty rises, particularly fears of a recession, investors typically rush toward the safety of US Treasuries, converting their foreign holdings into dollars in the process. In real terms, that means British investors might either sell their pound-denominated assets to buy treasuries, or they might simply offload pounds in favor of the dollar, seeking stability over risk. This defensive move toward the US dollar isn't always about chasing higher yields. Sometimes, safety and capital preservation are the priorities. The evidence, over the past few days, we've already seen hints of this rotation, pushing the dollar higher and in turn, capping gains for the pound. So, what does this mean for the GBP-USD outlook? Right now, it looks like the pair is butting up against the top end of a familiar trading range, perhaps signaling a period of consolidation, or even hinting that the dollar could regain strength. If, however, the pound manages to decisively break above the 1.36 barrier, then the pathway to the 1.38 level could open up, shattering the status quo and igniting new bullish momentum. For now, though, most signs point to the currency staying trapped in its 200 pip range. And this is the part most people miss. The ultimate direction will depend not just on economic data, but also on how global traders interpret risk and safety. Will they continue to view the US as the world's financial anchor, or could an unexpected shift in sentiment tip the balance? So, here's a question for you. Do you believe the US dollar's traditional haven role is unshakable, or are we about to witness a dramatic changing of the guard? Share your take below. Are you sticking with the consensus, or betting on an upset?